Good afternoon. This is Rich Schutte from Avalan Wealth. It's Friday, June the 24th, 2016. On behalf of myself and my partners John, Courtney, and Catherine Corain, Drew, Naivi, and the rest of us over here at Avalan, we wanted to help send you off into the weekend, hopefully with some peace of mind after what we saw happen in the markets today. A few bullet points that we've been able to come up with, between our own thinking as well as some of our competitors, peers, and other folks out in the market, and want to just arm you with some information in terms of what today means in your ability to ultimately reach your long-term goals and where it is that you're going. The S&P 500 today was down roughly 3.5%, but if we looked at it from last Friday, its week-over-week close, it's only down 1.6%, meaning that we had some good positive momentum during the week that offset quite a bit of today's losses. Also important to remember that we're fully diversified in our portfolios that we hold, and for most of you that we're helping to obtain your goals and achieve all that's important to you, we have a considerable amount of fixed income that's designed to specifically keep things more stable in scenarios like this. Today, interest rates actually fell considerably as demand for bonds went up, and that actually helped our bond prices, and our portfolios didn't fall as far as what markets did. Today was an emotional situation that was really more political than anything else. A decision was reached overnight in Great Britain to ultimately begin departing from the European Union. That's going to be a 2-year process. And during that period of time and after does not necessarily mean, and nor will it mean, that productivity is going to stop or consumption will tumble. Life is going to go on. Less than 3% of the revenue that S&P 500 companies generate come from the UK. So this is not a big economic deal here in the US and should have very little impact on domestic stocks and their performance over the next several years. More importantly, actually, we could potentially see this as a positive to domestic stocks in that it's less likely now that we'll see our Fed raise interest rates, which should ultimately give us a little extra boom, if you will, or boon to the legs that we have continued to exercise in this late market bull run. So those are our thoughts there. Keep in mind that we wanted you to know that we're looking at this stuff and paying really careful and close attention to everything that's important to you, and that we're here to be a resource not only to you but also to those that are important to you. And as you're talking to friends and family and loved ones, if they're concerned, please remember that we would love to be able to offer them a complimentary second opinion to make sure that they're comfortable in a good spot too, just as we're ensuring that you are. We wish you all a great weekend, and we hope to talk to and see you soon.